Both sides warn no deal is now likely. And Airbnb skyrockets. The stock rises 115% in a record opening jump for a major US listing.
They are pointing lower here in Europe. You can see that FTSE futures are a little changed, but DAX and Euro stocks 50 futures are off right now. U.S. futures are kind of mixed. You've got Dow futures up, and you've got NASDAQ futures down about 0.25%. Let's take a look at the global macro movers screen as the indexes open up. If you pull up your GMM on the Bloomberg, you'll see a number of columns, and the far left-hand column is the equity indexes. Right now, it looks like that should be, there we go. These are just the markets that are open. The FTSE opens first, unchanged. The IBEX down 0.5%, the CAC down 0.4%, and the DAX is down about 1/3%. So you can see that we're sort of unchanged to down, really only unchanged in the UK, and the FTSE is moving lower right now. This after the European Union actually approved its historic 1.8 trillion euro budget and stimulus package. Joining us to talk a little bit more about that is Peter Chatwell, Mitsuo International Head of Multi-Asset Strategy. Peter, I'm guessing the markets right now are being more influenced by a lack of optimism around a U.S. stimulus package, and not as lifted by any kind of exuberance over the EU agreement. Why isn't it as important to European investors when Angela Merkel is able to overcome Poland and Hungary, challenges from Poland and Hungary to make an historic deal?
Yeah, you're right. It's super significant. I think for European investors, though, it was probably within the realms of expectation already. So I would expect that what's been achieved yesterday and really over the last few months with the creation and implementation of the Recovery Fund, the much better understanding of their monetary policy tools and the importance they have on the euro area in reducing tail risks from the ECB. I think as foreign investors really start to understand that, that's when you're going to see much more flow and optimism into European risk assets and into the currency itself. But for now, I think just looking at European action, it's simply already a known, whereas we're looking at US equities, noting that there are some technical factors on the VIX that look a bit concerning. We might have the US government running out of money today. There are some near-term factors which have to be navigated before we can go back to looking at the strategic themes.
Okay, and let me ask you about where that all leaves the euro then, Peter. Those strategic themes, the Recovery Fund now signed off by European leaders, the ECB's actions of yesterday and comments of yesterday. How much pressure upwards do we see on the euro from here?
So we think in 6 months it'll be at 130 against the dollar, which is, I think, a massive move, an aggressive move. There's two main factors now. the implementation, all of the good news, the structural good news for Europe, that's a done deal, but it's still yet to be appreciated by the market. The euro still trades at a marginal discount to its fundamentals as we see it, has been doing that since the periphery crisis, and also did that at its launch between 1999 and about 2003. What we expect to see is that the euro is going to establish itself not just as fundamentally a correctly constructed currency area, but it should establish itself as a safe haven. So some of that safe haven premium, which the dollar has had for on a structural basis the last 10, 20 years, and within the last 5 years, it really was quite painful for the US economy. That is going to be transferred over to the euro and to yen and to the renminbi. And that's the shift that we're expecting next year. And of course, global economy goes back to growth. And in a growth environment, cyclical currencies, which is what the euro currently is, have a lot of upside to them.
Peter, Mohammed El-Arian has a great column on the Bloomberg today, and a really cool function, by the way. If you type N-I El-Arian as one word, you can see all of his columns. He talks about the ECB's moves yesterday, and they weren't a surprise, but he basically is saying the moves that they did make aren't likely to bring about growth or bring inflation any closer to their target, but they kind of had to, because if they hadn't made those moves, it would have possibly been even more hurtful. They can't really do much. Their tools have been blunted by the pandemic. The real issue for growth is, a health crisis that the ECB can't really control. But the one thing they didn't do was move the rate even more negative to address the currency, which has been painful. And he says he thinks that's because they recognize that the unintended consequences of negative rates are worse than the benefits they get from them. What can the ECB do to address a euro at $1.21 or $1.30 as you forecast?
Well, a euro at these levels, if it's there for the right reason, is actually not bad. So in that case, in this sense, I think the ECB is completely right not to take the euro on here. And I agree with Mohammed El-Arian that the unintended consequence or the pain caused by further rate cuts is far too great for it to be beneficial. Effectively, they're at the lower bound with regards interest rate policy. But if the euro is viewed as a credible currency, one which has still real rates which are unlikely to go much lower, particularly in comparison to the dollar, it's that real rate differential which is going to allow the euro to appreciate a lot in the first half of next year. Then that means that investors, global investors, are going to be looking at European assets and doing the comparison, thinking that, okay, we buy the currency story, it's going to be appreciating, and then let's look at the relative value. Let's look at the multiple that European banks are trading on compared to US banks, and let's do that sector by sector. And if you do that sector by sector, Europe just looks extremely cheap. And when we're looking at 2021, a return to growth, an environment where value is going to outperform, then you can do that on steroids by investing on the value sectors in Europe, because Europe itself is a value currency.
Okay, the ECB's active inertia, as Bloomberg's opinion columnist Mohammed El-Arian puts it, and you can see that on the screen. Peter, where does this leave credit spreads then? When you look at what's happening in credit spreads, do you think, the recovery fund, what a great initiative, what the ECB's doing with PEP, what a great initiative, has brought down these credit spreads, it's reduced spreads within the Eurozone and shared that risk out nicely? Or do you think this makes it much harder for those in fixed income government sovereign debt markets to trade? How do you see that sort of convergence of credit yields?
Very good question. It may make things harder to trade if you don't adapt to the new environment. The new environment is one of yield repression, and therefore to achieve to outperform the market, one has to hunt for carry. And to outperform the market, one has to think in volatility-adjusted terms here as well. And so when the ECB is effectively doing some sort of yield and spread control policy, then really what they're doing is they're reducing volatility massively. And that should then mean that investors can outperform just by going for carry, going for the parts of the curve which offer the most carry, going for the assets which offer the most carry. So what we've seen in the last 4 months is a big compression of spreads. It's nothing compared to what we're going to see next year, though. Spreads in credit markets are going to go back to the tights that we saw before the great financial crisis. That's the regime we're going back into. European countries, their debt are going to be viewed much more fungible to each other than they have been since the periphery crisis. We're going to be going back into that regime. And for corporates, there's going to be so much money that is trying to find a home because the euro is more attractive, that there is going to be much less differentiation, much less dispersion between names, between sectors, and it's all going to collapse the spreads down much further. And that is going to mean that European corporates and banks are going to be much more competitive because their funding rates are so much lower.
Peter, thank you so much. Stay with us. Peter Chatwell, Mizuho International Head of Multi-Asset Strategy. He'll stay with us on the programme. Further thoughts from Peter shortly. Coming up, Boris Johnson warns businesses to prepare for the strong possibility of no trade deal with the European Union. We'll get Peter's thoughts on UK assets next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are about 12 minutes into the trading day right now, looking at red arrows across European equity indexes. The FTSE itself down 0.33%. The IBEX 35 in Madrid down 0.6%. Let's get the Bloomberg Business Flash. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. Airbnb shares more than doubled in the home rental platform's debut, one of the biggest first-day rallies on record. Airbnb's market value makes it the world's biggest online travel company. Just a day earlier, DoorDash also soared in its public debut, adding to the year-end rush of IPOs. Gary Cohn is refusing to return millions in pay to Goldman Sachs, but he's come up with a workaround. He's giving the money to charity. The bank is demanding he return more than $10 million to demonstrate accountability for the company's involvement in the 1MDB scandal. But Cohn refused, a representative saying he'll donate it instead. Lloyds Banking Group says its black employees are paid about 20% less than their colleagues. According to the lender's report, the bonus gap was over 37%. The bank says it's so high because black employees are underrepresented at senior levels. Lloyds says it's attempting to improve diversity across its businesses. A record video game launch didn't provide Polish game studio CD Projekt with a boost to its stock. Investors instead focused on numerous glitches reported by players of the long-awaited Cyberpunk 2077. The game faced sky-high expectations, leaving some disappointed. I spoke to the developer's CEO.
8 million people trusted us before the release, and we really appreciate it and would like to thank them for it. So it's one of the highest pre-sale numbers ever in the gaming universe.
That's your Bloomberg Business Flash. Matt, Anna.
Thanks very much. Laura Wright here in London. Right, brace for no deal. That is the message from the UK Prime Minister Boris Johnson, and there's no breakthrough in sight in negotiations with the EU. Boris Johnson has blamed the lack of progress on the bloc's demands on common rules and standards.
There's now a strong possibility that we will have a solution that's much more like an Australian relationship with the EU than a Canadian relationship with the EU.
Each blaming the other then for intransigence. A reference to Australia there, of course, another name or the preferred term that Number 10 likes to use when they're actually talking about no deal, because there is no deal in place between the EU and Australia. Just getting a few lines coming through from the EU summit taking place in Brussels. They were supposed to get a briefing, EU leaders, on Brexit last night over dinner. That was delayed by climate talks. They talked all the way through the night on that subject. As a result, they've just been getting to Brexit now. Ursula von der Leyen tells the EU summit no deal is the most likely option. This according to the ANSA Italian news agency. That's where we are then, it seems, on the UK story. Peter Chatwell, Mizuho International Head of Multi-Asset Strategy, is with us still. And Peter, you've often talked about the likelihood of no deal. Do you think the market is too optimistic here? Because if you look at the pound, it's down 0.3%, but it's not at the levels that would suggest the market is assuming no deal from here.
Yeah, agree. The market seems very, very complacent on the UK. I think those who have been buying the currency, thinking that it's cheap and the only way from here is up, can be sadly disappointed. We only would be looking at pound from the upside really once it achieves parity against the euro. So euro sterling, I think around the 91 level should get to parity. I think as this no deal Brexit pans out. From there, I think then what we'll see is the UK economy lagging the US, lagging Europe in Q1 and Q2 of next year. So those economies will be going back into an upswing, and the UK economy will be mired with the hassle, the loss of confidence, the uncertainty of moving into the no-deal new regime. I think that the many sectors, many areas of the economy have wasted the transition deal. Just thought that nothing's changed, that's great, rather than actually getting on with understanding what this new regime would mean. So that's going to bite in Q1 and Q2. And then with a lag, second half of next year, that's the time when sterling probably starts to perform. So I think that there's quite a lot of room for investors to be flushing out their sterling exposure, just to be reducing it back down. So that will mean that probably gilts do outperform in that sort of taking off of risk, and I think that the global market gives the UK a lot more credit that it really should. I think that they believe that that we're far more trustworthy than the UK government really is.
Peter, what does a no deal then mean for London? I mean, London is no doubt the financial capital of Europe. It's really the financial capital of the world in many respects. Is that over on December 31st?
It's not over. What it will mean is that London has to continue to reinvent itself. So it's not going to be as much of a hub for Europe as it has been. And this has been known really since the government under Theresa May started pursuing a deal which didn't have services in it. So without services, it's always meant that the financial industry, the City of London, was going to have to reinvent itself. And this, I think, is one of the potential upsides of a no-deal Brexit, is that what it would allow the City of London to do is probably to deregulate, to become more competitive in that way. And that will allow the City of London to become more of a hub for Eurasia, enjoying the benefit of its time zone, having greater links with Asian currencies and Asian industry, and being something of a hub that way, but also being able to still be competitive as an offshore Euro platform with the benefit of some deregulation. That's going to be the one which is, if anything, it's the trump card that the UK does have, which is it's got the City of London, just needs to know how to allow it to reinvent itself when the trade with Europe really does come to an end.
Peter, thank you very much. Thanks for joining us. Peter Chatwell, Mizuho International Head of Multi-Asset Strategy. Peter will be continuing his conversation with Matt and I on Bloomberg Radio at 9 a.m. UK time. No doubt pick up further on some of those themes just discussed. Coming up, the most liquid future. Water is the newest commodity you can trade on Wall Street. What do we make of that? The details next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open right now, 23 minutes into the trading session, and we're looking at drops of about 0.5% on the major continental indexes and more than 1% on the IBEX in Madrid. Now, it's been 3 full days of trading for the newest commodity contract out there, water. The liquid future now joins the ranks of gold and oil, allowing investors to bet on the price coming up. Joining us to discuss is Danny Berger. So Danny, how are these futures actually going to be used?
Matt, look, these are primarily for big water consumers. So a farmer, for example, that maybe is an almond farmer, really water-intensive industry, or a utility company. And it's a way to specifically bet on fluctuations in the California water market. Yes, there is a California water market, but any changes in the price as water becomes more scarce. You have to remember these futures were announced in September after California had been hit by wildfires, had been hit by drought. So really, the question of water and its price and its availability being thrown into the picture there, and that's why this has come onto the market. Investors can trade it too. One high-profile example who might be interested is Michael Burry of The Big Short. In 2015, he gave an interview to the New York Magazine saying that water was really one of the big ideas of his for trading after the financial crisis. But still, again, it is mostly a farmer's product, and yeah, we've seen some interest in it so far.
Yeah, indeed. How has trading gone then since its debut? I was reading an interesting piece by our colleague David Fickling on the opinion team saying there are good reasons to believe water will never be traded globally, but it is being traded, as you say, in relation to California. So how has trading gone?
So volume has been pretty low, perhaps, to his point. You know, we've seen about 7 contracts traded on average, but that is more than the physical market. The physical market is extremely opaque. This index does just chart 5 different of the top California water markets. So it's not. It wouldn't be a stretch to believe that market doesn't even see on average 1 trade per day. One thing, though, I think is interesting to think about: if you have a normal sort of a traditional commodity future like gold, for example. When that future expires, usually you get the gold in exchange for letting that future expire. Well, if you hold this water contract and you let it expire, I can assure you, you're not going to wake up to get millions of gallons of water on your doorstep. Instead, it's a financially settled contract, which means you'll get cash at the end of this trade. So it is a little bit different than a normal commodity contract.
Yeah, we talk about taking delivery of all kinds of commodities, don't we? And they store oil out at sea. Where do you store sea? Danny, thank you very much for bringing us the story. Danny Berger with us there on the latest in trading water. On to things that are trading in Europe on equity markets this morning. Some movers for you. Randstad sees faster than expected recovery revenue trend in the 4th quarter. That's the line from the temporary staffing agency. Rolls-Royce down nearly 7%, expects to burn through £4.2 billion of cash in 2020 amid a collapse in demand for the wide-body planes. It says it's ready for any Brexit scenario, though. Ericsson is down by 7.7%, filed a lawsuit against Samsung in the United States. That is a quick look at your movers. Coming up on the program, can algorithms beat human judgment in a highly volatile environment? We will talk to the CEO of Systematica Investments next. This is Bloomberg. Welcome back to the European Market Open this Friday morning, half an hour into your trading session. Things getting progressively more negative as we trade through the European session. The mood music from the US seems to be influencing the mood. The lack of fiscal stimulus there. We have had some really big decisions from European leaders around climate and around budget, the recovery fund. Not much on Brexit so far, and we see that the European equity markets are down 0.5%. If we look at which sectors are leading us to the downside, it's a pretty defensive picture. We've got telecoms as the biggest falling. Actually, I take that back. Telecoms is down. It is the biggest falling sector. Not so defensive perhaps then this morning, but telecoms down by just over 2%, as you can see there. We went through some of the news around Ericsson earlier on. We also have personal care, drug and grocery stores to the upside. That is the only sector in positive territory. HelloFresh is one of the stocks doing well there. Ocado in food delivery, both of those different types, but both food delivery, both of those stocks moving to the upside. Now, hedge funds have just posted their best collective monthly performance for 6 years. According to data compiled by Bloomberg, they have delivered returns of almost 5.5%. But even the top performing strategy available last month, with long biased equity funds registering double-digit gains, they still couldn't, though, match the returns available from benchmark equity indexes. Let's talk about quants, about how systematic investing is doing right now. Let's talk to Leda Braga, who is the CEO of Systematica and founder, I should say. Leda, very good to speak to you. I wonder if you could give us your thoughts on algorithms versus humans and how that battle has been fought through the pandemic.
Look, the question as to whether algorithms do better than humans through the crisis is a difficult one to answer because styles mean more through the crisis than whether you apply a style in an algorithmic fashion or in a discretionary fashion. What I think is the main difference is that the algorithmic style retains its mandate perfectly through the crisis because we have a very well articulated game plan. So if you think about the moment of crisis in the market, it's that moment where uncertainty rules and you just don't know, and there's excessive news flow and you're a bit panicked. And human beings tend to get a bit more distracted. So the process-driven nature of systematic trading lends itself to just, you don't lose your compass, you carry on and you deliver. And sure enough, the styles that we run, which are meant to be decorrelated to equities and deliver well at times of equity market stress, delivered very well in March this year. So that was a good thing.
I mean, you're up something like 9 or 10% year to date, Leda, and of course the market is up more, but I had always thought of hedge funds as a place to put your money when you want to do better than the market when it tanks, and are willing to accept not doing as well as the market when it soars. Is that your understanding as well?
Yeah, that is very much the view. And as clients have become more technical, have developed more of an understanding, the more the picture has become clear that what they want is pay hedge fund fees for returns that are uncorrelated to equity returns. In particular, they look for strategies that will mitigate equity drawdown. And so, yes, you are right. They are willing to give up some upside performance when equity markets are strong. Because think about it, the hedge fund client base has gone very institutional lately. And institutions, pension funds, they're large-scale investors. They need a very large equity allocation. More so now that bonds are unattractive. And so what they want is they want to spend hedge fund fees, but they want to spend those fees on returns that will be very complementary to their equity portfolio. So equity drawdown mitigation is a big phrase in client conversations.
Okay, so that's one, equity drawdown, and they want uncorrelated returns, Leda. We've seen that value is having a bit of a comeback. We've seen momentum hit in terms of the styles that have been hit by this rotation. How have your models kept up with that kind of rotation or performed through that rotation?
Yeah, so we run a number of strategies in the firm. So, when you ask how our models have done, some have done better than others. We suffered in the models where we have a large allocation to value. They suffered as well. And investors are very aware of that, though. So it's a pleasure to deal with the institutional client base these days, because they're very technical, they understand. And so when you compose a strategy for them and you run a strategy for them, they understand what to expect. And so, yes, we suffered with that as well. But the styles where they expected positive performance and they expected good performance through the crisis, those styles have delivered no problem. They had consistent performance through Q1 and then managed to navigate the high volatility period that followed.
For years now, quants have been winning market share from discretionary managers in terms of rounding up assets. Is that over, do you think, after this year, or is that going to take a pause? Is this the start of maybe a quant winter more broadly?
No, I don't think so. I think, look, name an industry where technology and science have made inroads and then disappeared. It's never the case. Technology and science come along, people develop them, the public accepts them, and they become the modern, the scalable, the transparent way of doing whatever the business activity is. If you think about investment management, is pure data science. Huh? We're all in the business of making good decisions, good investment decisions for our investors based on data. And to do that with science and technology is not only a more transparent and a more open way of doing it, but it's more scalable. When we deploy an algorithm, we can deploy it and control the size much better. We understand the capacity, the transaction costs, the market impact. How much can I trade of that market until I'm too big for that market? These are all technical questions that the algorithmic trader is faced with every day. And so if you can establish these things, you have scale. Now, think about the pension fund out there. They are desperate for, as I say, drawdown mitigation, but at scale and low fees, because let's face it, the risk-free rate is zero or negative these days. So the proposition of using an algorithmic approach for the investment management is ever more attractive. And we have seen, from the figures that I see, the quant sector has received inflows, net inflows this year, whereas the rest of the hedge fund industry has lost assets.
Leda, thanks so much for joining us. It's been great getting your insight on this. We hope to have you back. Leda Braga, their Systematica CEO and the founder of that fund as well. Now, the possibility of a no-deal Brexit is causing a stockpiling frenzy at Britain's ports. People are even stockpiling Ferraris. Up next, we're going to speak to the CEO of Peel Ports, the owner of ports in major UK cities. This is Bloomberg.
Welcome back to the European Market Open. 40 minutes into a trading session that looks increasingly negative, actually, for European equity markets, now down more than 1% on the Xetra DAX and the CAC 40. Now, one of the things that's hanging over markets is uncertainty over Brexit, of course. The UK's split from the EU has created traffic jams at ports on both sides of the English Channel. Japanese automaker Honda said this week that it will keep its Swindon factory shut until December the 14th due to delays in arrivals of parts at ports. And Tesco told us earlier on this week that particular grocer is taking steps to divert traffic away from Dover. Joining us now is Stephen Carr, Peel Ports Group Commercial Director. Stephen, really good to get your perspective. So how much of this, in your experience, in the experience of Peel Ports, how much of this is stockpiling by businesses ahead of an uncertain Brexit deadline versus the global factors that are creating some level of chaos at many international ports?
Yeah, good morning. I think there's a combination of all factors coming together, really. I think to simply explain it as just Brexit stockpiling would be slightly flawed. The ports in the UK that are suffering at the moment are those deep sea container ports, which are more closely aligned to the Far East, North Europe trade lanes as opposed to the continental trade lanes. So Brexit's certainly a factor, but I also think some of the problems in international supply chains that have been caused by COVID right back to February are also a deep source of some of the problems right now.
So in terms of COVID, there's not much, the uncertainty, I think, is even more than the uncertainty we have for Brexit, because some people are assuming, at least, that by December 31st, we're going to know, right, what the deal is with Brexit. What happens after December 31st for the port business?
Well, I think in some respects, some of the conversations about the trade deal actually don't affect ports as much as you think, because that's related to the tariffs that will apply. Unless there's an agreement between the UK and the EU where somehow the UK stay within the single market and some of the border protocols aren't needed, the changes to paperwork, the changes to customs declaration are coming in whatever the customs deals are. And in some respects, the conversation is a bit distracting for getting businesses prepared and getting businesses ready for new customs protocols. So we do think that there's a great deal of focus on preparedness that needs to take place from December 31st. However, when you look at the deep sea problems, many shipping lines are being quoted as saying they believe that this glut of containers that's currently affecting ports internationally may stretch into beyond Chinese New Year and into March time. So I think there's a view that the container problem that we see today is going to last beyond Christmas. I think there's a certain amount of Brexit stockpiling that affects some of the shorter seaports that hopefully once we're through Christmas should fall away as those stocks fall into supply chains.
Stephen, that's really interesting, the balance of factors that's influencing the port chaos that we're seeing in some ports in the UK right now. Tell us about the Northern Ireland Protocol and how that impacts on your business. You operate the Liverpool ports, and I wonder what kind of preparations are in place, whether you know everything you need to know from the more detail we got on that protocol this week about how things are going to operate across the Irish Sea.
Yeah, I think certainly the fact that the Northern Ireland Protocol clarification is only taking place this week, 3 weeks before the potential change in rules and regulations makes life difficult. But it's less important for the port community, and more important for the port community. So it's those traders who are moving products, who have to do the customs declarations, who need to be clear on what they're doing. By them not being clear, that will result in problems manifesting themselves at the ports, but they're not for the port itself. The other element with the Northern Ireland Protocol, if you take Liverpool specifically, Liverpool's a very diverse port, and we have the issues on the Irish Sea to contend with, but we've also got a very big deep sea container terminal, and largely we've managed to keep our operations going. The Northern Ireland checks will actually take place in Northern Ireland and not on the British side of the Irish Sea. So there should be less impact on physical processing here in Liverpool, but obviously if there are delays and if vessels get delayed, that will then have consequences that we'll have to deal with.
You have, I think, a really great blog post on peelports.com. I'd recommend viewers who are interested to check it out. You say that large proportions of trade would benefit by moving in unaccompanied mode. What do you mean by that?
Yeah, so at the moment, there's a lot of traffic that moves between the EU and the United Kingdom with drivers driving trucks onto ferries. The driver stays with that ferry, and then they drive it up through Great Britain. And of course, when you look geographically at Britain, it's a long and thin country, and what we're saying is why would you not use the water more? So a crossing between Calais and Dover may take 90 minutes, whereas a crossing, there's a new ferry service that started, for example, between Iberia and Liverpool that takes far longer. The driver, though, doesn't travel with that truck, and that means that the driver resource can be used much more efficiently, but also the land journey is smaller, so not only is it better because you provide more times for customs processes to take place while the car goes at sea, but it's also beneficial for the environment as well, because maritime is typically a cleaner form of transport per ton kilometre than road transport is. So there are multiple benefits for that, but effectively it's disconnecting the driver from the freight whilst it's on the water, and that then means some of the impacts of delays can be mitigated.
All right, very interesting stuff, Stephen. Thanks so much for your time this morning. Really appreciate it. Stephen Carr, their Peel Ports Group Commercial Director, talking to us about the future of ports and trade. Coming up, the EU approves a landmark 1.8 trillion euro budget and stimulus plan. We'll speak to European Commission Vice President Vera Jourova next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are just about 50 minutes into the session right now and looking at losses of 1% or more on the DAX and the CAC, more than 2% on the IBEX 35. This even after the EU approved an historic 1.8 trillion euro budget and stimulus package. The bloc resolved the standoff with Hungary and Poland, who are threatening to veto the plan over conditions on the money. Leaders are also committed to cutting emissions by 55% from 1990 levels by 2030, so in less than 10 years. Joining us now is Bloomberg's Maria Tadeo with a guest out of Brussels. Maria?
Yes, good morning, Matt. And we're now joined by the European Commission Executive Vice President and Commissioner for European Values, Vera Jourova, who is joining us in a morning that I know means a lot to you. You've been a strong defender of rule of law. And I want to ask you, when it comes to the compromise that was agreed yesterday, would you say Viktor Orban is the biggest loser here?
I will rather speak about the winners. The winners are the citizens of Europe and the taxpayers, because in bad times we need good news. There are two good news. For the citizens, that the budget is unblocked, because we desperately need to start to distribute the money for recovery after COVID. And the second, for the taxpayers, for a long time, the people in Europe are telling us that they want their money to be better protected wherever the money goes. And you know that we have a very big redistribution machine. We are sending a lot of money to all the member states. So the bigger protection of the money, and of course also of the rule of law principle, because this was my intention to achieve that when I came for the first time with this idea already in 2017.
Right, and I want to ask you a question specifically about the reaction in Hungary, because Viktor Orban is saying that this is a victory for him, that he's been able to separate the money from the politics. But I look at the wording on the deal, and I don't see anything that's changed except for a few guarantees that the European Court of Justice could play a role. So I wonder, why is he claiming victory over this?
It's a question for Mr. Orban. It's good to read the text, which you have done, and thank you for that, because we always should know what we are speaking about. I personally think that to include the decision of the European Court of Justice is a good idea, that we all need more legal certainty, and our European Court in Luxembourg is the one which has the decisive word on what is legal and what is possible to do from the legal perspective. So I believe that the decision of the European Council from tonight might mean some postponement, and for the Commission, we will use the time for further analyzing the situation in all the member states and prepare the ground for possible triggering of the procedure. But I cannot say now that we will trigger it against any concrete country. I mean Hungary or Poland, which were the countries which blocked it. We will be objective, and we will
you know,
have maybe more time to do this analytical work properly. Yes.
Right, and a lot of this I know you talked about was accountability, and we know that this was a huge theme for the Dutch, and for Prime Minister Mark Rutte, where he said every euro cent needs to be checked. Money cannot go to cronies. That's something that he said many times. Do you think that with this compromise that you achieved last night, are you going to be able to do that, to make sure that every euro that is spent is checked and done properly?
This is a very big step forward, and it gives us a much stronger tool to guarantee what you are asking about, and what rightly so Mr. Prime Minister Rutte is asking for, because his country belongs to the net contributors countries, and the taxpayers in the Netherlands, of course, again, rightly so, ask about how our money is protected. And I can guarantee you that this new tool was heavily needed to give this guarantee to the taxpayers, not only in the Netherlands. And we will, as Commission, act in objective manner. We will do the proper analysis, and if necessary, we will use this tool.
And Commissioner, just as a final question, I have to ask you about Brexit, purely because we understand that the head of the Commission was briefing European leaders, and she says the situation is very serious. She thinks the probability of a no deal is now bigger, higher than that of a deal. How worried are you at the Commission about the prospects of a no deal happening almost imminently on Sunday?
I have to refer to the words of the president because I am not part of the negotiating team. Well, we still have several days ahead of us. No deal option is not a good option, but it's up to the negotiators whether they can still do something about the situation and whether they can achieve the common understanding and common agreement. Still, there is some time.
Well, Commissioner, we thank you so much for your time on this morning. I know that you were very much fighting hard to get this compromise. You and the German presidency that's been achieved. It's unblocking a lot of money too. So I'm sure there's also relief in the countries that need that money. So thank you so much. We appreciate your time for joining us on Bloomberg. Matt?
I'll pick up, Maria. Thank you very much. Thanks to Maria. Thanks to the Commissioner. Thank you very much for that conversation. As they were speaking, you saw the line across the Bloomberg there that Spanish 10-year bond yields have fallen to 0% for the first time. We saw this with Portugal. Now we see it with Spain. Interesting conversation earlier with Peter Chatwell from Mizuho about what this convergence of European yields means. More on that on Bloomberg Radio next. Up here is surveillance. This is Bloomberg.
Prepare for no deal. That's a warning from Boris Johnson as the mood sours on both sides of the channel. Both sides warn no deal is now likely. Pandemic support, European leaders approve a 1.8 trillion euro stimulus plan after resolving a standoff with Hungary and Poland. And Airbnb skyrockets. The stock rises 115% in a record-opening jump for a major U.S. listing. Can the company hang on to its lofty valuation? Well, good morning, everyone, and welcome to Bloomberg Surveillance. Happy Friday. I know it's been a long week for many, so a lot of you will find relief in finding the weekend. The markets certainly have struggled for directions, but today, stocks are slipping as prospects for a new stimulus deal in Washington have been fading. Oil actually reaching a pre-pandemic high. I'm also looking at global oil demand, which is rebounding after hitting through last month, helping push the Bloomberg Commodity Spot Index to its highest level since 2014. Now, there is some story that we need to bring to you. The Chinese authorities, and I'm looking at my Bloomberg terminal because this is a developing story. Chinese authorities have detained Hayes Fan, who works for the Bloomberg News Bureau in Beijing. Now, this coming in just moments ago. This is on a suspicion of endangering national security. This comes from the Chinese authorities. Hayes Fan was lost in contact with one of her editors at 11:30 a.m. local time. That was on Monday, and then shortly after, we understand that she was being escorted from her apartment building by plainclothes security officials. Of course, she is one of our reporters over in Beijing, and so we'll have plenty more on that throughout the day. Throughout the 4 days since her disappearance, Bloomberg has also sought information on Fan's whereabouts from the Chinese government and the Chinese embassy in Washington. We'll have more on that. Let's also talk about Brexit, and the UK and the EU are both warning that a no-deal scenario is looking increasingly likely. Boris Johnson's last-ditch plea for EU leaders to step in and salvage trade negotiations was frustrated last night when summit talks overran, knocking Brexit off the agenda. The UK Prime Minister has pledged to go to Paris, Berlin and Brussels in search of a deal. Let's now get the latest from our Maria Tadeo in Brussels. Maria, good morning to you. Is Boris Johnson bluffing, or are we actually heading for a no deal?
Well, Francine, it's a hard question to answer, but what I can tell you is that in response to that, the head of the European Commission, Ursula von der Leyen, did give a briefing just a few minutes ago to European leaders. She spoke for less than 10 minutes and told them that she believes at this stage the probability of a no-deal Brexit is higher than that of a deal, and that by Sunday there should be a picture as to where things are going. She also said that, frankly, there was nothing, not much else she could put to the table at this stage, and none of the European leaders responded to her intervention. It was very short, less than 10 minutes, and that is problematic for the Prime Minister because yesterday he repeated the standard line that the UK is ready for a no deal that could take the Australia option, which means no deal too, but also said that he's willing to go to Paris, he's happy to go to Berlin, to Brussels to get a deal. But the European leaders so far have not really engaged at that point, and today, if he was hoping to get an intervention from Emmanuel Macron, he was hoping to get an intervention from Merkel. Clearly, judging by this briefing that lasted for less than 10 minutes, and no European leader responded to von der Leyen, sees that that moment just didn't happen.
Maria, we keep on hearing rumors that actually this could be postponed to 2021, so some kind of friendly no deal for now and then back to the negotiating table. What would be the advantage of that, and is it really palatable for the UK when this has been dragging on for so long?
Well, Francine, the UK, they always say they don't want to extend and they don't want Brexit to drag on. If by the end of the year you don't have a trade deal in place, they are going to go for WTO, and that is the end of the story. They don't want Brexit to continue in this never-ending cycle that really trapped Theresa May into a series of very long extensions. When it comes to the Europeans, that this is also significant. They also say that negotiating in 2021 would be very difficult. The Europeans want to move forward. They've been working all night, Francine, on climate, on the budget, on rule of law, on many things that have nothing to do with Brexit, and only dedicated this just 10 minutes today. They want to move forward with their own agenda. So I have to say, I've never heard anyone to say that this is a valuable option, an option that they're looking. If anything, they just say they have 3 weeks to get it done and ratify it. To give it extra time to be ratified, it's a different story, but to continue in a series of mini deals in 2021 is an option that the Europeans say they just don't favor.
Thank you so much, Maria Tadeo there in Brussels. Now, joining us with the very latest also on what this means for the UK economy and on Brexit is Simon French, Chief Economist at Panmure Gordon. Simon, how much anxiousness are we going to see in the UK economy, given we're still dealing with COVID, we're in a pandemic, and we have a no deal, there will be quite a lot of disruption?
Yeah, it's important to put the economic outlook for 2021 in its correct context. The near-term response to a no deal will be to shave, in our view, around 200 basis points off UK growth next year. but it's still likely to be something of the order of 4 to 5% of GDP growth, which will be the fastest rate in 60 years. And actually, to some extent, that'll just be an arithmetic function of how far the UK economy fell in terms of an 11% contraction probably in 2020. So we need to put the marginal impact of a no deal against the backdrop of what will be a COVID vaccine-led recovery. And that will be the real challenge for people who say, but hang on, this has instilled significant frictions, both near term and longer term, into the UK economy. Amidst the noise of a COVID recovery, it'll be quite difficult to see those.
Simon, what is the fault line for pound? What does pound do, and what exactly is it looking at? If we have a no deal, could it be that the economic impact will be less than is currently priced in?
So I think certainly going into this week, traders were positioned with a potential upside of the sterling dollar to around 140, just above the 140 level. The downside risk here is probably, certainly in a sort of a weakish dollar environment, is probably not down to the sort of teen levels. You're probably looking at a tracing down towards the high 120s in our view on the event of a no deal. But the transmission through to core inflation in the UK. We've heard warnings from the food industry, but there are other sectors, the capacity constraints at the port pushing up, both haulage and portage prices. Those are the kind of things that will change the inflationary outlook, which will make investors not want to buy back in on a mean reverting rebound in sterling. So a weakness, a prolonged weakness, and one that actually, having been there for 4.5 years, is likely to be there for a number more years in the event of a no deal.
Simon, what does the fact that actually we have an EU budget, an EU recovery plan that's pretty comprehensive, also the EU leaders coming up with a more comprehensive plan for, gas emissions, what does that mean for the recovery of the EU? How much will the Brexit hit impact France and Germany?
Yeah, so we shouldn't lose sight. There's so much partisan commentary out there. It's very easy to lose sight of the fact that a WTO relationship between the EU and the UK, given the trade surplus the EU has with the UK, is not going to be insignificant, but it will be focused in those economies that have the tightest relationship, the closest relationship with the UK. So you're thinking about Ireland, you're thinking about France, certainly northern France, you're thinking about Netherlands, Belgium. Germany more immune to that impact. So there will be, sub-stories, subsector, Eurozone and EU level impacts. But in the grand scheme of things, against the backdrop of both the stimulus package announced by Christine Lagarde and the overnight confirmation of that 1.8 trillion euro recovery package, I think it's probably third in the list of importance, which is why I think Maria was spot on, why EU leaders this morning paid such little attention to Brexit, because they have, if you excuse the pun, bigger fish to fry.
Okay, but will that bigger fish actually be enough to sustain a recovery? So even what we heard from the ECB, they're concerned about euro strength. They can't really do much about it, and the recovery could take longer to take in place without the UK.
Yeah, spot on as a question, because overall, even in the event, and the ECB yesterday, the staff forecasts were modelled, as most central banks in the European area and the UK area, on a orderly transition. They were still modelling 1.3% inflation, 1.4% inflation by 2023, even with double-digit growth in broad money, even with the stimulus package, even with the announcements from the Governing Council. And yes, is that likely the risks to the downside likely to increase as a result of a Brexit deal? Absolutely. But in the grand scheme of things, I think Euro-focused investors would have been more worried if Hungary and Poland had been holdouts on the recovery fund than based on the Brexit deal. It is a narrow but acute issue, particularly for the UK and Northern European economies. But at an economy-wide level, it's only about 2% of GDP, compared to in the UK, it's 12% of GDP, that trading relationship.
Simon, by when do we have to reach herd immunity to see a full and deep recovery?
Yeah, Yeah, so I think this is the big determinant of the growth profile in almost all developed economies, is how quickly can that happen. I mean, our base case is at the start of Q3 appears to be the moment where sectors of the economy that have been acutely impacted by social distancing measures start to be able to return to a degree of normality, and you start to see that recovery be broad-based, not just in the sectors that have been able to adapt their delivery method, but actually those that are reliant on social interaction. So we think it'll definitely be a second half of 2021 recovery story, with the strongest quarter-on-quarter growth being in the third quarter of the year.
Simon, thanks so much. Simon French, the Chief Economist, and Panmure Gordon joining us this morning. Now, coming up, with 20 days until the end of Brexit transition period and no sign of a deal, we also speak to the former Prime Minister Theresa May's de facto deputy, David Lidington. Plus, a 115% pop, more on Airbnb's record-breaking IPO. That's coming up next, and this is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
We just got indication on your opening price. Shares indicated to open right now at $139 a share, which is more than double what you priced at. I mean, are you at all concerned about froth? What do you think about that number and the potential that you're leaving billions of dollars on the table?
That's the first time I've heard that number. When we, in April, we raised money, and it was a debt financing. That price would have priced us around $30. So I don't know what else to say. I'm very humbled by it.
All right, that was the Airbnb chief executive, Brian Chesky, speaking to Bloomberg after the company's debut yesterday, its valuation reaching $100 billion. Now, let's just bring you more on a breaking story from China and one of our own reporters. Authority there have detained Hayes Fan, who works for Bloomberg News Bureau in Beijing on suspicion of endangering national security. Fan was last in contact with one of her editors around 11:30 a.m. local time on Monday. Throughout the 4 days since her disappearance, Bloomberg has also sought information on Fan's whereabouts from the Chinese government and the Chinese embassy. We'll have more on that throughout the day. And of course, if we have any news, we'll bring it to you. But certainly this is a big development story. Now, with just 20 days until the end of the Brexit transition period and no sign of a deal, how should the UK approach negotiations with the EU? Boris Johnson says business and the public should now prepare to leave the single market and trade on what he calls Australian terms, effectively under the rules of the WTO. Now, my next guest was until recently at the heart of government at Westminster. Joining us now is David Lidington. He's former UK cabinet minister and Theresa May's de facto deputy prime minister. Mr. Lidington, thank you so much for giving us a bit of your time. Is now a no deal on the cards? Is that what we'll have?
It's clearly on the cards, and I mean, I'm somebody who very much wants to see a deal, a good deal done. I think no deal would be enormously damaging to the UK in both business terms and in political constitutional terms because of the impact on the Scottish independence debate. But my fear has always been that if things were left right till the last moment, then there was a risk that the negotiators just wouldn't have the time to get the details and compromises ironed out, the sequencing of different moves by either side arranged. And I very much hope still that in the days ahead that the British government and the European Commission are able to make those compromises, because a no deal is going to be bad news for both sides.
Is there the political will to find a deal from the UK side?
I believe the Prime Minister when he says that he wants to have a deal. I regret the fact that the serious engagement has taken so long. It's only when the top political bosses, Boris Johnson, Ursula von der Leyen, and her talking to people like President Macron, Angela Merkel, get involved, that the big trade-offs can be made. And I think that the UK government has been slow to recognise and explain that there have to be trade-offs. We are wanting a privileged access, tariff-free, quota-free, to this very important market of the European Union, by far our biggest trading partner anywhere in the world. And they are going to demand a price for that, part of which is going to be to, as they would see it, to guard against the risk of unfair competition and dumping on their market without tariffs and quotas. So there was going to have to be a discussion about what the conditions were. And as I look at it, the gaps are relatively narrow, both on the so-called level playing field, the extent to which the UK and the EU agree to sort of follow common standards to avoid the risk of unfair competition, and on fisheries, where I think everyone accepts the UK is going to be sovereign in control of its waters. The question is, what are the transitional arrangements? How long should they be, given that you've got a lot of European fishing businesses that have built up business on the expectation of fishing in UK waters, and that UK fishermen need to be able to sell their fish into Europe. Most of our fish is not eaten by British people. It's sold to the continent of Europe.
But are you expecting at this point, Boris Johnson to do a compromise at the last minute? And if he does so, will backbenchers support him?
I hope he does. I mean, I don't know for certain which way he will jump, or indeed what moves the Commission might make to make such a deal easier to achieve. I'm very confident that if the Prime Minister agrees to the terms of a deal, and that would mean compromise from both sides, that he will get it through Parliament relatively easily. Most MPs in the governing Conservative Party will back him. It's only a short time since he won a very big Conservative majority at the 2019 general election, and the main Labour opposition party has also indicated pretty clearly that they will vote in favour of a deal, because they know that a no-deal outcome would be so damaging, and they don't want to take the risk of falling into that by default.
Thank you so much, David Lidington there, the former UK Cabinet Minister, of course, talking to us on Brexit on this very important day. Now, coming up, 20% pay gap. Black employees at Lloyd's are paid a fifth less than peers. We discuss diversity in the finance industry. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, turning to equality, and Lloyds Bank says its black employees are paid about 20% less than their colleagues. The lender disclosed the finding in its 2019-2020 report as it tries to improve diversity in its businesses. For more, we're joined by Bloomberg Quick Takes Jennifer Zabazaja. Jen, what exactly did Lloyds' report find?
Yeah, so Francine, I mean, it really just confirmed what many people have been talking about now for months, which is that representation at the top of many of these companies is still really lacking, and companies are still really struggling with getting their representation numbers up. So this report specifically found, as you mentioned, black employees were found to make 20% less than their peers, but even the bonus pay gap was even more stark at about 37.6% that of their colleagues. And so what this report noted was that there have been improvements made in bringing in minorities into the company, but there's still a disproportionate underrepresentation of minorities at senior level ranks. And so they've set up an action plan to help establish and grow Black employees, but also recruit people and create a culture that supports these employees. And they also just announced a new chair of their Black Business Advisory Committee, Claudine Reed, and she plans to work with the company to develop this culture that, as I mentioned, creates a better company for Black employees to work in, and they plan to share their findings in the first quarter of 2021. And so it's notable that the company made their metrics public, but it's also notable that they are actually taking actionable steps to improving the culture, improving the company, and improving diversity altogether.
Thank you so much, Jennifer Zabazaja, there, Bloomberg Quick Take reporter in New York. Now, coming up, what does the post-Brexit future hold for the UK's fund managers? We'll ask Standard Life Aberdeen chairman Douglas Flint. That conversation, it's exclusive, and it's up next. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Chinese authorities have detained a Bloomberg News staff member, Hayes Fan. She was last in contact with her editors on Monday, and it wasn't until Thursday that Bloomberg received confirmation she was being held on suspicion of endangering national security. A Bloomberg spokesperson says the company is very concerned for her and is working to support her while it seeks more information. China says the case is still under investigation. Now, the U.S. plans to impose sanctions on Turkey over its purchase of a Russian missile defense system in 2017. Bloomberg sources say President Trump has signed off on the measures, but didn't say what they actually included. Turkey defended the move, saying it urgently needed an air defense system, and its allies didn't offer suitable alternatives. In Europe, France is swapping a lockdown for a curfew, easing some measures while tightening others. Theatres, museums and cinemas will remain closed instead of reopening next week. The nighttime curfew will take effect on December the 15th, although an exception will be made for Christmas Eve. Travel across France will now also be allowed. Here in London, it's on course for the toughest COVID restrictions after new data shows the region has the highest rate of cases in England. It comes as a survey shows Brits are warming to the idea of getting vaccinated. According to the poll, 70% say they're prepared to take the jab. That's a greater proportion than in the US, Germany, France, Sweden, and also Japan. And a panel of US government advisors is backing the vaccine from Pfizer and BioNTech. The step clears the way for emergency authorization by the Food and Drug Administration. That approval could come within days, and people could start getting vaccinated just a few days after that. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, with the UK and EU both warning it's now increasingly likely, what would a no-deal scenario actually mean for London's financial services sector? Well, Boris Johnson's last-ditch plea for EU leaders to step in and salvage trade negotiations was frustrated last night when summit talks overran, knocking Brexit off the agenda. The Prime Minister now says the UK should prepare to leave without a deal. Well, joining us now for an exclusive conversation is Douglas Flint. He's chairman at Standard Life Aberdeen. Mr. Flint, as always, thank you so much for joining us. What would a no deal, in your eyes, actually mean for the City of London and financial services?
Well, I think as far as the City of London financial services are concerned, I think the City has been planning, preparing on the basis that there would be no deal, and on the basis that you have to prepare for the worst and then hope to get a better outcome that enables you to improve in that position. So I think the City's ready for a no deal and has already planned and made the arrangements so that, most importantly, our clients are able to access the services they need without interruption. Certainly that's our position, and I believe that's the position right across the City. Having said that, for many sectors they will be impacted, and clearly maybe at the end of this weekend and certainly in 3 weeks' time, we're going to know with much greater clarity, with absolute clarity in 3 weeks' time, what the arrangements are going to be from the beginning of next year, and that again will enable businesses to plan.
Douglas, when you look at some of the posturing and some of the negotiations, are you at this point expecting a deal?
I really don't know. I don't think I've got any better insight than anybody else. I think if there is a deal, it's likely to be quite a modest deal, and no doubt that as time goes on, both sides will try and improve from the position that we end up on the 1st of January. So, the EU has published the areas that they would look to have contingency arrangements. I think that tells you where the major stress lines will be. But I think, given the words coming out of both sides, it's likely, more likely than not, that we are heading towards a very thin deal or no deal, and we have to adjust if that's the case.
What's your, worst case scenario if this were to be delayed? And there's talk, which is certain diplomats briefing Bloomberg, it could happen or not, some kind of moratorium. So we go back to a negotiating table maybe in 4 or 6 months in 2021. What would that mean for financial services?
I I think that the longer there's uncertainty, the more difficult it is. If we end up, of course, with no deal or a very thin deal, many of the sectors will want there to be sectoral deals or a broader deal negotiated. And of course, if we end up in a situation that is unattractive to both sides will begin to get real clarity as to what no deal or a thin deal means. And that will put pressure, I think, on both sides to come back to the table in specific areas and more generally to see how they improve the economic position for both sides of the argument. So I'm sure there are going to, no matter what happens, I'm sure there are going to be individual discussions and broader discussions going on for some time.
What are you expecting the markets to be overall in 2021? There's so much hope on a vaccine. Are we going to see a deep recovery once enough people are vaccinated? Or is there a danger that the market is seeing one thing, but fundamentals just don't support it so much?
I think there's going to be quite a lot of divergence, which in many respects for an active fund manager like us, it gives opportunity. I mean, I think that the discounting of the impact of the vaccine is probably a little bit ahead of where we think it'll be. It is going to be rolled out progressively during the year, and the elements of society that are most vulnerable at the moment in terms of getting the vaccine, the younger elements, are going to be later in the cycle than those most at risk of having a very bad effect if they get coronavirus. So I think we'll see this progressively through the year. What is good, very good, is that we're seeing a variety of vaccines come through in remarkably quick time relative to history. And we're also seeing more and more diagnostic tests being available. And I think it's the combination of vaccine plus diagnostic tests that enables businesses, enables individuals to plan with a little bit more certainty as to what their life is going to be like in 2021 and beyond.
Is passive investing the future for Standard Life Aberdeen?
It's going to be part of the mix. I think there are elements that can be done in passive investing where people with a relatively modest amount of money want a broad spread at low cost. That is clearly part of the mix, and we can see how successful that has been. But of course, for our more sophisticated clients, the institutions, the wholesale channels, they're looking for solutions, and that's a much more bespoke product than just a general market referencing product. So there'll be room for both, and indeed, there'll be much more utilization of quantitative techniques to package attributes, factors of investing to give people exposure to what they want in a much more sophisticated way, in a more bespoke way than has ever been possible before through ETFs and the like.
But passive investing is arguably a very competitive market. What will make the difference? Do you need to buy companies to put you in a better footing in the passive space?
We certainly need to increase our capabilities. That may include adding some capacity through acquisition, but we already have a passive capability. The question is how quickly we can scale it up. And I think just like the best retailers, we need to have a range of products. That means that our clients can get from us everything from pure passive to the most sophisticated bespoke, so that they stay with the investment house through all of their needs as their risk preferences change, as their geographic preferences change, and the kind of solutions they're seeking to address change. So we want to have a full range of products that we can say, whatever you want to do, we have a product that meets your needs.
What kind of acquisitions would you be looking at, right, if it's something that you would explore to be more beefy and more substantial in that space?
Well, it's a question of scale. I mean, we have the technology, the technical skills to do everything at the moment. The question is whether there are aspects that we could build that capacity quicker if we were to add something at an institution, at a technology company that had already broadened the range of how they address ETFs or passive products. That's a possibility. But again, it would be a question of looking at something relative to what the cost would be and the time frame would take for us to build up in selected areas that we choose to expand into. So there's no certainty we'll do it. It's a question of do we get a scale advantage? Do we get an acceleration of where we think we need to go? But the range of products will be broader going forward without a doubt, because that's where the market is. That's where our clients want to be.
All right, thanks so much. Douglas Flint there from Standard Life Aberdeen. Staying with us. Now, coming up, it was one of the biggest first-day rallies on record. Airbnb shares more than doubled in their trading debut, propelling the home rental company to a $100 billion valuation. More on that story later this hour. Up next, though, we'll continue our exclusive conversation with Douglas Flint, the chair of Standard Life Aberdeen. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Airbnb shares more than doubled in the home rental platform's debut, one of the biggest first-day rallies on record. Airbnb's market value makes it the world's biggest online travel company. Just a day earlier, DoorDash also soared in its public debut, adding to the year-end rush of IPOs. Now, Tesla's legal headache in Germany is growing. A court has ordered the car maker to halt logging at a construction site, risking delays to its first electric car factory here in Europe. The temporary halt is meant to give the court time to examine claims by environmental groups. They are saying the US company isn't doing enough to protect local lizards and snakes. And Gary Cohen is refusing to return millions in pay to Goldman Sachs, but he's come up with a workaround. He's giving the money to charity. The bank is demanding he return more than $10 million to demonstrate accountability for the company's involvement in the 1MDB scandal. But Cohen refused, a representative saying he'll donate that money instead. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now let's get more with Douglas Flint from Standard Life Aberdeen, who's with us for an exclusive conversation this morning. Mr. Flint, we were talking a little bit about passive versus active investment and where you're taking Standard Life Aberdeen. How do you think the pandemic, the working from home, will actually change investing forever?
Well, I think it's going to show that many of the sectors that have been incredibly powerful in their investment performance this year will continue to be so. The working from home environment has put a huge amount of emphasis on technology, on networking, on communications, And one can't see that going backwards from now. So, I mean, I think, in terms of a sectoral weighting, I think those sectors will continue to be heavily weighted. And I think we're learning to use technology much better. I think if 12 months ago you'd have said that we would have been able to equip our entire workforce to work from home and do so successfully without glitches in terms of the execution capabilities that we had in terms of transacting for clients and to continuing to connect to clients and build solutions in a remote way. I think if you'd said that was possible 12 months ago, there would have been a lot of skepticism, but in fact it's been done. And there have been some elements of the way that we've done business that will continue, even if we could go back to the way things were before, because we've discovered elements of efficiency that would have taken a lot longer to be unearthed. And I think from a people perspective, I mean, I was on a sort of a Christmas gathering virtually of many of our employees last night, and they were saying they have been able to connect with more of their colleagues internationally than ever done before, because everyone's at home. So if you get the time zones right and bring in people at the appropriate times of day, you can be far more connected than you've ever been before, and nobody's on a plane and so on. So there have been some quite big wins as well as some challenges to overcome. But it will change. I mean, the way business is done, what we've been happening in the high street and so on and so forth, it has a long way to play through.
Douglas Flint, do you believe that actually Standard Life Aberdeen needs a radical new strategy to stop the investor outflows? And if it is something that you need, what would that be?
No, we don't need a radical new strategy. I mean, basically, our strategy is to deliver what our clients want. I think that Stephen Bird, having come in at the end of what was a complex and absorbing process to put two businesses together and then deal with the sale of the life business, coming in as that was getting to the end of that cycle. He's come in with a growth agenda. He's come in with an enormous commitment to building the solutions clients want and customer service, starting with the customer. So, again, we've got the capabilities, we've got the skill sets. It's a question now of outward facing, and as the marketplace adjusts because of the coronavirus and the build back that will follow it, there's a huge opportunity for an active manager with a very broad product set to support. And I think one of the things that's really important is how we use our firepower and the mandates that we're given by asset owners to engage in that reconstruction of economies, particularly with an ESG focus. And that's where we are spending a lot of time designing that.
I know you've started a formal auction for Parmenion. Can you update us on how that's going? How many people interested?
All I can say is that the process is underway, and we're very pleased with the interest that's being shown.
Both you and the chief executive have so much experience in Asia. Is that something where you want to be more present? Is there any opportunity to really tap that region?
Oh, we both have spent most of our careers around Asian markets. Clearly, Asia is today growing faster again than the rest of the world. The demographics of Asia and the savings needs of Asia and the formalization of retirement savings are creating great opportunities, both in terms of investing in the companies in the region, but also in providing products to citizens in that part of the world, and indeed to the institutions that are beginning to allocate some of their pools of savings outside the region. So I think it will be the largest growth in global savings will be coming out of Asia over the next 10, 20 years. So we want to be part of that, yes.
So how much are you expecting to boost your presence in Asia by?
Well, we already have a very strong presence in Asia, based in Singapore. We have presence in Hong Kong. We have operations in China. We have a full license. We have a joint venture with a life business. But we will, getting license permissions and so on and so forth is a steady process. But we've got a lot of opportunities in this country, a lot of opportunities in Europe and America. But definitely Asia will be a bigger part of our business going forward, and we will do that selectively, but solidly, positively. I think it's a huge opportunity.
Is the fee structure? Yeah, and is the fee structure different in Asia? Is it easier to ask for more?
No, it's not. I mean, I think everywhere. This is a very transparent industry now. There are some elements better. Asia has embraced technology in many ways because it started with a blank sheet of paper, and therefore there are not sometimes some of the stages that we have built in historically in the UK and in Europe. But no, it's a very competitive marketplace, and you can see from the number of major global asset management firms entering or expanding their businesses in China and Asia more generally that it's going to be a very competitive space. So I don't think there are any sort of embedded opportunities for excess margin. I think we are in a very competitive world, and that's good because that means that we have to be innovative and demonstrate the productivity as well as the investment skill that we have.
Douglas Flint, thank you so much for joining us today. He's, of course, the chairman at Standard Life Aberdeen with an exclusive conversation this morning. Now, coming up, Airbnb sees the biggest IPO pop on record for a company that raised over $1 billion. So did the company leave too much money on the table? Well, we debate IPO pricing next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, in the span of 24 hours, 2 record-breaking IPOs hit the U.S. market. First, it was DoorDash, and then Airbnb, whose shares opened 115% above its IPO price. Now, that gap has renewed a years-long debate about how to price new listings. Well, joining us to discuss all of this is Danny Berger. Danny, I have to say, it was actually pretty crazy, and even the chief executive thought it was crazy what was going on at the open. Did Airbnb get their pricing wrong?
Well, I guess it depends what exactly their goal is, Francine. Often, if companies who IPO don't get this big post-listing IPO pop, it's seen almost as a failure. Failure might be a little bit too strong, but the idea is that it might dampen some of the demand from retail investors if there's not this strong first-day price gain. But also at the same time, when they do have that big pop, it gives to concerns like we're having today. Like a lot of investors are debating that perhaps Airbnb left too much money on the table, that there was an additional $4 billion they could have raised if they had priced those shares more closely to what they traded at. Now, when it comes to fundamentals, that's an entirely different question. But what we did see, part of the reason this happened is the supply-demand dynamic was in favor of these shares rallying. Airbnb only offering 8% of available shares to purchase. You had all these retail investors who wanted to rush in and buy it. And that sort of balance meant that we saw this huge surge in share prices, Francine.
All right, Danny, thank you so much. We'll, of course, have a look at both of these, Airbnb and also DoorDash. In the meantime, we're being briefed in Brussels after a pretty extraordinary summit where 2 main stories came out. First, we have a deal in terms of the EU recovery plan, but also we heard that from various heads of state. Is Mr. Macron also tweeting that actually they have talked about cutting emission gases in Europe, and that will really lead the way in terms of climate change action. So we're being briefed right now in Brussels, a final press conference. They pulled an all-nighter, not unlike these leaders to do that. They do that every so often. But of course, the main other questions, which has not been addressed, is the EU and the UK both warned that the outcome of talks could be a no deal. So that wasn't part of the discussions at EU Deal Summit. The summit is ongoing. We'll bring you any breaking news out of that. Bloomberg Surveillance continues. This is Bloomberg.
De la question du développement des vaccins, de la mobilisation à une échelle absolument gigantesque de ces vaccins pour protéger les Européens.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Prepare for no deal. That's the warning from Boris Johnson as the mood sours on both sides of the channel. They warn a no deal is now likely. Pandemic support. European leaders approve a 1.8 trillion euro stimulus plan after resolving a standoff with Hungary and Poland. And Chinese authorities have detained a Bloomberg News staff member in Beijing on suspicion of endangering national security. Well, this is Bloomberg Surveillance. Good morning, everyone. I'm Francine Lacqua here in London, Tom Keene in New York. Tom, the news flow is absolutely terrific. We look to a possible no-deal Brexit. Certainly, that's what we've been briefed by all sides. We were being also briefed by people inside the government here. We'll have to see whether there's at least a political will to find an agreement. It could happen in the next couple of days, or it could not happen at all. Then we look at the U.S. economy, of course, with jobs and the trajectory for that, and we look at the EU Leaders Summit. I know the Council President, Mr. Michel, is briefing reporters right now about the deal, about the recovery fund. He'll touch on Brexit, and he'll also talk climate change.
Well, the summary of it all, Francine, is a weight to the tape. I mean, yields come in. The two-year yield in the United States, which has been really stuck at 0.14, finally gives way to a lower yield. You see it in an ever greater negative real yield in the United States. And the shocking yields in Europe, it is a most unusual time.
Yeah, it certainly is. And actually yesterday, what took me by surprise was a pretty big swing when it came to crude prices. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. I'll actually take it. The U.S. is one step closer to getting a coronavirus vaccine. A panel of government advisors has approved the shot developed by Pfizer and Germany's BioNTech. The experts say the vaccine's benefits outweigh its risks. The FDA could give the final go-ahead within days. On Capitol Hill, another roadblock for the attempt to come up with a pandemic relief plan. Senate Majority Leader Mitch McConnell's top lieutenants are signaling it won't get support from a majority of Republicans. The stumbling block is how to limit liability of employers in connection with coronavirus infections. And a warning from British Prime Minister Boris Johnson. He says business and the public should prepare to leave the European Union single market without a trade deal. Johnson says the UK will continue to seek an agreement, but he warned that the EU's demand that the UK follow future changes in its rules is a major obstacle. And authorities in China have detained a Bloomberg News staff member on suspicion of endangering national security. Hayes Fan is a Chinese citizen who was seen being escorted from her apartment building Monday by plainclothes security officials. Officials say the case is under investigation and Fan's rights have been fully insured. Spokesman for Bloomberg says the company has been speaking to authorities to find out more. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina Mitchell, thank you so much. Greatly appreciate that. Let's do a data check right now. It is the oddest December. I mean, I always say that, but this year, really unusual. We'll talk about Washington in the next hour, a lot on Brussels in this hour. I know Maria here in a moment. The two-year yield, 0.1310%, a 0.12 there would be really something. We haven't seen that yet. Futures negative 22. The VIX now out of full stick, 23.68. Shows some of that Thursday, Friday tension in the market. Dollar gives me a bit of strength. I'm not going to talk it up. Yen, 103.98. That's only happened in the last 20 minutes. So yen not giving away. You see it more in the dynamics in Europe. Francine?
Yeah, Tom, it's very clear that markets don't really know what to grapple with. So, you know, prospects for a stimulus deal in Washington is probably fading a touch. Coronavirus cases are spiking, and we're seeing some of these stocks retreating. I also wanted to show you oil. I think we just managed to put it in. Oil actually retreating from a pre-pandemic high on the dollar rising. And then the other thing I wanted to show you is just Brexit, right? And the Brexit play is either cable or euro sterling cable at the moment, 132.04, as there's a lot of talk that actually there are just too many differences between the UK and the EU. Boris Johnson warned late last night that we should prepare to leave the EU without a trade deal. The euro overall holding most of the gains after the EU, though, approved a historic stimulus package. So let's get onto the package and efforts to strike a deal, a Brexit deal before Sunday, continuing in Brussels despite faltering negotiations. We heard from Ursula von der Leyen warning of a no-deal split with the UK as Prime Minister Boris Johnson echoes concern of a failure. But then we were just talking also about this EU recovery fund. For more, let's bring in Bloomberg's Maria Tadeo from Brussels. Maria, it seems that the EU is playing it cool. Under the surface, are they panicking if there's a no deal, or are they just fed up?
Francine, they're playing this very cool, and there's a number of reasons for this. European leaders have been in a room locked for 20 hours. It's an all-nighter. They've talked about everything, climate, the budget, the recovery fund, Turkey, but they just spent 10 minutes talking about Brexit. And this was an intervention from Ursula von der Leyen, the head of the European Commission, who briefed to say, at this point, I believe a no deal is more likely than a deal. So European leaders have not really talked about Brexit at all, and that is a big contrast from what the Prime Minister said yesterday, in which he said, we are ready for a no deal, but nonetheless, I'm willing to go to Paris, I'm willing to go to Berlin if that's what it takes. Clearly, he wants to get the political leadership here in Brussels involved. He wanted to get a Macron-Merkel moment today, and that just didn't happen. They've been talking about everything but Brexit.
Maria, there seem to be 3 stumbling blocks. I don't want to go to fishing today. We killed that yesterday with your saving me on Turbot as well. There is a question of trust in that if they do an agreement, how do they monitor things? Are they miles apart there?
Yes, Tom, and that's key for the Europeans. It really is about trust in the UK. Can you trust that Boris Johnson and the UK government is going to be a faithful, loyal competitor? They know the UK will become a competitor after Brexit. They're not naive. They know this very well. But can you trust that they're going to play by the playbook? And the answer right now is it's not clear. And that's a problem for the Europeans. It's not the fish when it comes to Brussels. It really is about the equivalence, and it's being able to trust the UK. And so far, they don't have what it takes. And a lot of this, of course, Tom, is the optics. It's almost prepping the ground for that Sunday clash and that deadline. But it is about trust. And right now, the European leadership will tell you they don't trust it. And a lot of this has to do with the UK, too. And the number of regulations that they've put on the table, then they put them away, then they brought it back on. That's not helping that bilateral relationship. Perhaps that's the reason, though, why Boris Johnson wants to speak to Emmanuel Macron and Angela Merkel. But as I say, that did not happen. That moment just did not happen today.
Maria, when you look at, what some of the diplomats are briefing, and we're just also hearing from Angela Merkel, it'll be interesting what she says about Brexit. Those are live pictures coming from Brussels, Justice Hulpius building, just a couple of 100 feet from where Maria is. But Maria, when you look at, some of the concerns that diplomats are saying is that when it comes to Brexit, we could just delay it by a couple of, weeks and months and then go back to the negotiating in 2021. Who has the appetite to just keep on dragging this?
Francine, the answer so far, and based on the information that we have, is no one. For the Brits, they really don't want to get trapped into Theresa May's cycle of extensions that are never ending. And for the Europeans, they don't want to do mini deals. Nothing is agreed until everything is agreed. That's how they work. They don't want to get into 2021 having to negotiate on a bilateral way, doing mini deals on a different number of sectors. That is simply not how Brussels works. And they will also tell you, we want to move forward. We care about the Green Deal. We care about our own budget. We care about coronavirus. It's not about Brexit in Brussels. It's not about Brexit in continental Europe, and that's perhaps what gets lost in translation between the two of them.
Maria Tadeo, thank you so much. An exhausting week for you, and no doubt a busy weekend as well. Maria Tadeo in Brussels. Coming up on John Farrow's The Open, Dr. Alarian of Allianz and the University of Cambridge. Mohammed Alarian in these tumultuous times. This is Bloomberg Futures, -20.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen.
And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. Disney is projecting Netflix-style growth for its new streaming services. The company says it could have up to 350 million subscribers worldwide by 2024. That's due to an onslaught of programming from Marvel, Star Wars, and Pixar. Disney plans to spend up to $16 billion a year on content. And first DoorDash, then Airbnb. In a 24-hour period, the two startups went public and their valuations skyrocketed. That's a sign that both companies could have raised a lot more money than they did. Airbnb opened 115% above its IPO. It was the biggest debut rally on record for a large U.S. listing. Experts say the reason for the extreme pops was demand from retail investors and a scarcity of shares to buy. And that is the Bloomberg Business Flash. Francine.
Thank you so much. Now, Karina, let's talk about everything else that's going on in the markets, and let's talk about Brexit, the EU deal, with stimulus in the U.S. Joining us now is Peter Dixon, Commerzbank Global Equities Economist. Peter, we're spending so much time on Brexit, and I know, we can see the end of this very long and protracted negotiating process, but does anyone apart from the UK actually care in the markets what happens with Brexit?
I think in the markets they care, because when it comes down to it, Brexit will have an impact upon company earnings. So if you're a German, French, or an Italian producer, which has got a decent presence in the UK, then you care. But I think the problem has gone on so long, it's dragged on politically and economically and in all other ways, that people are somewhat bored of it. And I think if you look at market pricing, yes, there's a little bit of concern at the moment, but I think markets are really only going to react when we see the whites of the eyes of the deal. In other words, you might see a very strong reaction in sterling, which up to now we haven't seen.
Peter, what does that mean for equities in the UK? Is this a good time to get in? Do you think we'll get a deal at some point?
Well, I mean, the working assumption has always been that there will be some form of transition to a smooth trading arrangement, which is not a WTO form. Obviously, that is a fairly a deal which is an assumption which is under pressure at the moment. So it's probably not a good time to step into the UK at all right now. You want to sit and wait and see how the chips fall. I think in the longer term, if sterling were to collapse, I mean, the normal expectation would be that large cap stocks perform well. But this time around, I just feel as though that there are too many unknowns. I mean, a lot of businesses will have to rethink their operations, and that will have major impacts upon cost and therefore, the underlying bottom line. So I think investors will be looking at the UK and thinking, maybe not a good time to get involved right now.
Peter Dixon with us with Commerzbank. Right now, let us listen in to the events in Brussels.
Would remain free, sovereign, if you wish, to decide what they want to do. We would simply adapt the conditions for access to our market accordingly, the decision of the United Kingdom, and this would apply vice versa. On fisheries, here also we continue to have a gap. We have not yet found the solutions to bridge our differences. We understand that the UK aspires to control its waters. The UK must, on the other hand, understand the legitimate expectations of EU fishing fleets built on decades and sometimes centuries of access. On these and other points, our negotiators are working. We will decide on Sunday whether we have the conditions for an agreement or not. In the meantime, the Commission has proposed 4 targeted contingency measures today. They provide a short-term fix to ensure basic connectivity in air and road transport for 6 months. And we are also proposing to the UK to ensure reciprocal access to each other's waters for next year. One way or the other, in less than 3 weeks.
Ursula von der Leyen, the President of the European Commission, of course, front and center here in this great discussion of the continent and across the channel to the United Kingdom. Peter Dixon is with us now with Commerce Bank. Peter, on and on we go. And the overwhelming signal and theme of this week is lower yields top to bottom, including the 2-year U.S. Giving way. And the German 2-year yield is not stochastic. It's not abrupt and lower. It is a mass moving lower. What does the German 2-year yield ever greater negative signal?
Well, I mean, it tells you, I think, or rather it's a consequence of the fact that central banks, the ECB very much at the forefront, are engaging in a policy of financial repression, very much in the way that the Fed did back in the 1940s and 1950s. I mean, they are doing their very utmost to keep rates low in order, A, to stimulate the economy, and B, in order to ease the burden for governments who have to service their ever-rising debt. That's what it signals. I mean, that's the result of this process, and it's not going to come back anytime soon. I mean, I think the era of low and possibly negative interest rates is going to be with us for a very, very long time to come.
Peter Dixon, thank you so much on this historic day. Peter Dixon with Commerce Bank. As European leaders manage the message on this intractable issue for the United Kingdom, the gentleman from France managing his message forward, some significant tensions between France and Germany at this historic moment. Coming up on Balance of Power, historic moments, I should say, in Washington. He is a general experienced in finance and also State Department affairs. General Kimmett with David Weston in 12. This is Bloomberg. Good morning.
Massif, avec, vous le savez, à côté de ce plan de relance, les financements du...
you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, a developing story in Beijing. Authorities have detained a Bloomberg News assistant on suspicion of endangering national security. Now, on Monday, Hayes Fan was seen being escorted from her apartment building by plainclothes security officials. Fan is a Chinese citizen. Officials say her rights have been fully insured and her family have been notified. Chinese citizens can only work as news assistants for foreign news bureaus. They're not allowed to do any independent reporting. Well, a spokesperson for Bloomberg says the company has been speaking to authorities to get more information. Now let's get an update from our editor-in-chief, John Micklethwaite. John, this we found out, recently. What do we actually know happened?
What we know happened was at 11:30 on Monday. That was our last contact with her from an editor's point of view. Later that day, we discovered that, as you said, she had been escorted from her apartment by plainclothes officials. And since then, we have been doing our best to try and find out exactly where she is, what's happened, to try and get her back. And, to be very clear, Hayes is a very talented person, a very respected, integral part of our newsroom, very popular, and we are deeply concerned for her well-being.
Has Bloomberg been able to speak to authorities to understand exactly what they were looking at?
We have spoken to a lot of people on an informal basis all the way across the world. We've spoken to people in Washington, the Chinese embassy there, all the way across to China itself. We've obviously tried as hard as possible to find out exactly what we've got. We finally have got this statement from the authorities detailing why they are holding her in the way they are. And so we have reported that.
What do you think will happen next?
I think what happens next is not entirely clear. We will wait and see what they do. We will continue to work as hard as possible to help her and her family at this time. As I said, she's a very talented and integral part of our newsroom.
Will it change the way Bloomberg reports on China?
Not at all. We intend to continue covering China in exactly the same way that we have done henceforth. We've broken a lot of news in China, and we'll continue to do so.
All right, John Micklethwaite, thank you so much. Of course, he is our editor-in-chief, and we'll bring you up to date with any breaking news. Chinese authorities detaining this Bloomberg News staff member in Beijing. Tom.
Francine, thanks so much. Let us frame up for you folks on this Friday. The tradition is to get through Friday and read into the weekend. We do not have this luxury at Bloomberg News this weekend. There are too many stories around the world. Francine and I want to recapitulate the moment as we set up for this Friday and also into the weekend, and certainly front and center across the channel is the battle in Brussels and on Brexit. We're watching that carefully, and we do so with sterling 132.23 with some stability, maybe weaker over the last number of days. We've been hearing from authorities in Brussels. Pascal Dono is scheduled to be with us from Ireland. That's an extremely important story, maybe underplayed here over the last number of days. We look forward to getting an Irish perspective here on this great moment. In the United States, and particularly for those of you in Europe distracted by the news, and for those waking up in America, it is a movable feast, including the President of the United States tweeting well past midnight, I believe, as well. And we will have an interesting Friday. Number one, without question, as we go to Martin Schenker at the top of the hour, is the Supreme Court and what they will act on or do on Friday. And I'll be honest, Francine, it's a mystery what we'll see out of the judiciary of America on this Friday.
Tom, EU leaders pulling an all-nighter. Now, we know that we have an EU recovery plan in place after Poland and, of course, Hungary backed down. Now, what we also know is that leaders are briefing as we speak at the Justus Lupus building. We heard from the Commission President, Ursula von der Leyen, that a no-deal split with the UK is the likeliest outcome on December 31st. But I have to say, the meeting that lasted overnight was not focused on Brexit at all. They were focused on the recovery fund. They were also focused on the green recovery with some quite ambitious ambitious new steps being taken by Europe as a whole to get a handle on gas emissions. Now, on Thursday, we also heard Boris Johnson warning that UK businesses and the public need to prepare for a strong possibility of a no-deal split. Again, in Brussels, they're not focusing on Brexit too much, Tom. The rest of the bloc is going ahead with ambitious targets on a number of things. If you look at stocks, they're slumping, dollar rebounding. I did want to point oil, Tom, retreating. There was a big move yesterday, retreating from this pre-pandemic high, and a bit of movement also on pound because of all this Brexit chatter.
Well, the Brexit chatter is out there, and again, these are intractable issues, and you see that more than anything, folks. I see it in bond pricing. The fixed income market, equity's a little soft. Yes, futures -20, make it -19 in the U.S., but the yield space just speaks volumes. The U.S. 2-year yield is giving way, and I'm watching the Swiss 20-year yield. That's one of the benchmarks I look at roll over, an ever lower negative yield, -0.335. But more than anything, I'm watching what matters, which is the German paper, and it is not sport.
No, it's not sport. You know what? We'll talk about yields, actually, and whether the ECB is becoming a yield curve controller. Up next, our conversation with Jean-Claude Trichet, the former ECB president. I know he'll have a thing or two to say about yields and euro strength. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg Surveillance. Good morning, everyone, as we continue to monitor 4 or 5 large international stories and, of course, what we do best, the markets. Right now, I would suggest, given the historical perspective, our most important interview of the week. Jean-Claude Trichet is a former ECB president. He has been an observer of before Trichet, during Trichet, and a careful observer of his ECB in the years afterwards as well. Wonderful to speak to you this morning. I want to speak to you from an engineering perspective. You knew in Lyon years ago the idea of the oil in the engine, and you better get the viscosity right. You have a European financial system that is gumming up by ECB action. Has the debt market in Europe lost its viscosity, lost its ability to be fluid in the great financial system?
Well, Tom, it's a pleasure to be with you. I would say that what the ECB is doing is precisely to help the market, various asset classes, and of course jurisdiction, to be as smooth as possible, taking into account, of course, the exceptional dramatic circumstances where we all are. So I would say that at least the intention of the ECB is certainly to have, again, a correct market, a smooth market, a market which also convey the decisions taken for the euro area as a whole, the transmission of monetary policy to all the euro area. I take it that it is what they are doing, and it seems to me that they are succeeding not too poorly.
Mr. Trichet, we mourn the death of Valéry Giscard d'Estaing. He was a great leader, a great thinker for not only France, but the continent as well. He would say, I'm sure, and I believe you would say, that the risk here is Europe becomes Japan. Is Europe on the edge of becoming zombie-like or financially asphyxiated like Japan has become?
Tom, first, I have to tell you that I was an advisor of Valéry Giscard d'Estaing myself when he was President of the Republic. So I join you in honoring a great man, a man who not only was a great European, but also created the famous G7. The first G7 meeting was in Rambouillet at the invitation of Giscard d'Estaing in particular. So only to mention that, let me say that all advanced economies have a real problem, a real issue over the last 10 years, say, which is present in Japan, but also in Europe and in the US, and in all advanced economy to my understanding. And that has to be corrected. Of course, it's very difficult. You have a lot of anomalies in the functioning of our economies. Productivity progress are miserable in comparison with what we had before the crisis. The growth potential is much lower than before. Inflation is much too low despite all efforts that are made by central banks. And all this is creating abnormal, I would say, behavior of all the economy, abnormal low level of nominal values, and of course, abnormal, extraordinary accommodating policies, but they are necessary, taking into account that they have to protect the advanced economy against the risk of materialization of deflation. So they are doing their job, but they cannot do everything, and I trust that the other partners have their own responsibility, clearly, because we cannot go forever in the pre-pandemic situation. As you see, I am mentioning the functioning of the market economy before the pandemic. The pandemic added its additional dramatic layer to all the difficulties that we had before.
Monsieur Trichet, good morning from London. Has the ECB effectively become a yield curve controller? And if yes, how problematic is that?
No, I mean, if they would be a yield controller, I think they would have said it, like the Japanese have said it. So, no, I think that they are continuing to do what they are doing, and the PEP in particular is there, in my opinion, to help transmitting in the best way possible the monetary policy decisions, and of course to add an additional element of accommodation, because we had bad news, at least bad news at the end of the present quarter, with the overall PMI being very bad, I have to say, and of course calling for year 21 to be much less flattering in the projections of the ECB than it was before.
Do you worry about inflation suddenly, picking up? And if there is inflation, would the ECB even be able to do something about it by raising rates, given the high level of debt we have in Europe?
Well, I think that the problem is the same in all jurisdictions of advanced economies, clearly. We all hope that inflation will pick up, certainly in Europe and in Japan. And of course, if inflation picks up, it is a totally different universe, where even with the same real interest rates, you could have nominal interest rates higher. And I would say that I expect when we have, but you could see the projections of the staff of the ECB, if I'm not misled, are very miserable in terms of inflation, even in 22, with only 1.1%, lower than the September projection. So we see that we are far away, at least in the projections of the staff of the ECB, but also the IMF, also the OECD. So we are far from going back to a more normal inflation level. And of course, what counts also are the solid anchoring of inflation expectations, and they have something to do on that. So my understanding is that when time comes, when inflation is picking up in the advanced economy and in Europe in particular, it would be more natural, of course, to have nominal interest rates higher, and I would not dramatize the way things will, I would say, go back to a more normal position. I wouldn't certainly say that we would go back to pre-crisis situation, but a more normal situation.
Okay, but one final question then, Mr. Trichet, if we could. The eloquent economist Olivier Blanchard has led the charge on reflating and getting that nominal yield up. How does Jean-Claude Trichet reflate? What is the exercise or process to commit reflation?
Well, I would say in all advanced economy, reflation is the rule of the game. It is the reason why the central banks are so active themselves and accommodating. So the goal is there quite clearly, in my opinion. That being said, of course, these central banks are not the only game in town. And I would say something, perhaps I told you already, Tom. We have a bargaining power of labor in countries that are at full employment that is insufficient. And that, of course, creates low augmentation of wages and salaries, low augmentations of unit labor costs in Japan, in Europe, in the, I would say, full employment economies, and in the US. The US is picking up a little bit, but also in the US. So this is abnormal, has to change, cannot last forever.
Let us come back with Jean-Claude Trichet, the former European Central Bank president. An important headline out of China as we continue to report on China, and this from the Politburo. This has been somewhat expected. The Wall Street Journal with an important article yesterday, among others. The China Politburo vows more, quote, anti-monopoly efforts in 2021. This is really front and center now in the zeitgeist. What will be the approach of President Xi and the Chinese government on capitalism in 2021? We will continue our coverage on China. Now with the Bloomberg First Word News, Karina Mitchell.
Tom, thank you. The FDA could give the final go-ahead to a coronavirus vaccine being deployed in the U.S. within days. A panel of independent experts voted that the benefits of the shot made by Pfizer and Germany's BioNTech outweigh the risk. The FDA doesn't have to follow the recommendation, but it often does agree with its advisors. 4 battleground states urged the Supreme Court to reject a Texas lawsuit and declare the 2020 election over. The lawsuit wants to overturn results in Pennsylvania, Georgia, Michigan, and Wisconsin and keep them from casting their electoral votes for Joe Biden. Pennsylvania asked the justices to send a, quote, clear and unmistakable signal. The move by Texas and 17 other Republican-controlled states who joined the suit is unprecedented. And as we've been reporting, authorities in China have detained a Bloomberg News assistant on suspicion of endangering national security. Hayes Fan is a Chinese citizen who was seen escorted from her apartment building Monday by plainclothes security officials. Officials say the case is under investigation and Fan's rights have been fully insured. Her family has been notified. A spokesman for Bloomberg says the company has been speaking to authorities to learn more. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina Mitchell, thank you so much. Greatly appreciate that. On the markets, on Dow 30,000, you go back to first principles. That's not occurring in the IPO market. Look at Airbnb, look at Dashdoor, DoorDash, whatever it is. David Pearl at Epic Investment Partners will join us. These are the guys that own free cash flow analysis. David Pearl, required listening for Global Wall Street. Stay with us. This is Bloomberg.
ya stima ningeipata naweza sikia vizuri sana kwa sababu inatumia nguvu sana.
The advantage of the electric uncut over the manual conventional uncut is that one, it increases the productivity level of the users. Two, it is eco-friendly in that it does not pollute the environment. Three, it increases the income level for their users in terms of loading capacity and also in terms of productivity.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance. Tom and Francine from London and New York. We're back with Jean-Claude Trichet, the former ECB president. We were talking, of course, with Monsieur Trichet about inflation, some of the expectations, some of the shifts in our economies. Monsieur Trichet, I want to ask you something about, something that's been doing the rounds that has been quite controversial. Some people are actually calling for the ECB to hold government debt in perpetuity or even cancel it. That's illegal, but leaders could actually change the treaties. Is it something that we should really consider or talk about?
No, I don't. I think it is not at all appropriate. I think it is something which has no real meaning and would be a recipe for destroying the credibility of the signature of the states and of the old treasuries, and also the credibility of the central bank and of the currency. So if you want to lose confidence of the, I would say, investors, savers, the world over, you do that. And it was also recommended in the US, if I'm not misled, MMT, so forth. And I don't think at all that it is reasonable. Again, it works on the working assumption that the rest of the world will eternally trust the signature of the treasuries of the advanced economy and the credibility and confidence you have in the central bank and in the currency. So it's naive. It is a recipe for catastrophe. I am very clear on that.
How should we deal with all this debt? Is there a danger that actually, to please markets, certain governments talk about austerity too soon?
No, I mean, speaking of austerity, when you have this level of additional debt, doesn't seem to be very appropriate. What we will have to do when, of course, we have swallowed the extraordinary period where we are, and I hope very much that at the end of next year, with the vaccine, we will be in a very different universe. But we don't know yet, and we have to remain very prudent and cautious. But that being said, when we are over the pandemic, we will have to care for a combination of action which would permit the debt outstanding of the advanced economy to diminish progressively as a proportion of GDP. Even if it is at high level, the rest of the world, investors and savers in the advanced economy, in the rest of the world.
Okay, guys, new order. I'm going to place new order for euro. I'm going to sell short euro at 121.286. Okay, 121.86. Okay.
Non-catastrophic meaning without hyperinflation, without default, without catastrophes that are always very tough on the most vulnerable of our fellow citizens.
Mr. Trichet, the French developed the slide rule in about 1860. They dragged us into the engineering age. And yet now we find ourselves with a Europe that is perceived as behind in technology to America. How does Europe catch up on technology if it seems to be such a cultural struggle?
I agree with you, Tom. We are in a situation which is very abnormal because Europe was at the, I would say, head of the team in the past, I would say, centuries. So we are recognizing that. We are recognizing that for platforms, for digital platforms, we are lagging behind. There is a great determination to catch up and not to let only the US and China galloping ahead of us. We will see what happens. But don't underestimate the European brains. A lot of what's coming in the US is coming out of European brains, if I may. And even for the vaccine, I see that a German firm plays a decisive role in the vaccine today. So don't, come on, how would I say? Don't forget that the European potential is considerable. And again, I trust that to the extent that we are aware of the anomaly which we are presently observing, we will catch up, I trust.
Thank you so much, as always, for your valuable time, Mr. Jean-Claude Trichet, the former ECB president. Now, efforts to strike a Brexit deal are faltering, and the EU Commission President Ursula von der Leyen says they will be, or that they will decide on Sunday if conditions are right for a deal. The UK Prime Minister Boris Johnson has been echoing the same concerns about a possible failure. Well, joining us now is the Eurogroup President, Pascal Donoghue, and Irish Minister of Finance. Mr. Donoghue, as always, thank you so much for talking to Bloomberg. Where are we at? Is it a 50-50 chance that we get a Brexit deal, or is it a much smaller chance than that?
Well, there is still the possibility and the chance that an agreement will be reached, but I think it is fair to say that it's very evenly balanced at the moment. President von der Leyen updated the heads of government in the European Union on where the negotiations stand, Francine, and all of the governments of the European Union are completely behind the Commission and our negotiation team in the Commission, and will be supporting their efforts in the coming days to see if an agreement is possible. I believe it is possible, but we cannot underestimate the difficulties in reaching agreement, or indeed the consequences if agreement cannot be reached.
Could talks actually drag on to next year?
Oh, I think the fact that we saw a deadline set for Sunday and the fact that the President of the Commission met Prime Minister Johnson earlier on in the week is the sign of the need for negotiations to conclude promptly and urgently in order for example, countries to know where they will stand from a trading point of view with the United Kingdom. It's so important for businesses in Ireland, in Europe, and indeed in the UK to know what the trading relationship will look like in early next year. So while it's possible, and I'd expect that there will be some areas of discussion that will still continue for a while, the core features of what the future trading agreement need to look like between the EU and the UK do need to be concluded soon.
Pascal, Tom Keane in New York, good morning to you, sir. As you know, in his Ireland,
good morning, Tom.
Northern Ireland and the United Kingdom have lived, it has been centuries of the delicate balance of trust. Give us the trust meter right now as these negotiations continue. What do you observe about the development of a constructive trust that can lead to a constructive outcome?
Well, Tom, you will know that in the rhythm of negotiations, and particularly negotiations that are so charged, that issues of trust and relationships still and always do come under pressure at this point in such a serious engagement. But from my engagement with our negotiators in the European Union, there is still trust from the European Union that an agreement can be reached. I expect the same is there from the United Kingdom. And the reason why that trust is there does go back actually to the question that you posed to me. And I heard the earlier question about history that you put to Mr. Trichet. And the history is of relations between the United Kingdom and Europe and Ireland that in recent decades have been so transformed and made so different due to our membership of the European Union. And that is the context for this negotiation. We may be neighbours by geography, but we have become allies because of choices that have been made over values that are informed by our shared history. And in the changing world that you're well aware of, the European Union, Ireland and the United Kingdom still have far more in common than we might have that is differing at the moment. So for all those reasons, trust will continue to be there to find an agreement. But of course, the atmosphere will be charged, I'm sure, and know it will be difficult. But that just reflects the historic nature of the negotiations that are underway.
Based on what you know now, after the tumult of the last number of days, what will the border between Northern Ireland and Ireland look like?
Well, of course, due to the agreement that was reached between the European Commission and the British government earlier on in the week in relation to a Northern Ireland protocol, it is the case that due to that agreement, we will be able to protect the peace process, which the governments of Ireland, of the United Kingdom and the European Union are so committed to. And I now have increased confidence that we will be able to manage trade and movement across the border due to the protocol. So because of that agreement being reached earlier on in the week, in many, if not all, of the scenarios that we might have to deal with in the future, we will still be able to allow movement across the border in the way very similar to what it is at the moment, and critically, we'll be able to maintain the political and economic atmosphere around the border, which is such a hugely important factor in maintaining peace and stability on the island of Ireland.
Minister, does Brexit and COVID harden the case for a proper EU financial market? And where are we on banking union? Will we have something concrete and comprehensive soon?
I think, Francine, that is an important point. The context has changed in our debates on banking union and capital markets union within the European Union. It has changed because of Brexit. It has changed because of the consequences of COVID. And that is, I believe, appreciated by the finance ministers of the euro area in particular. We know.
Okay, I'm going to remove this order because it moved, as you can see, already too far, and it takes a long time to execute the order. Let's wait for other good opportunity to enter the trade, okay?
in the Eurogroup in regard to a stronger role for the European Stability Mechanism and bringing forward important safeguards for banks in Europe. And then secondly, the European Council asked me to report back to them by next summer on what areas we believe we can make further progress on in banking union. So that is what has happened, and that is what will happen across the first half of 2021.
Yeah, and the ESM reform is absolutely crucial, but now comes the even harder work of, sovereigns letting go a little bit of their financial institutions. Do you see that headed? Do you see, do countries understand what needs to happen next?
Well, countries, I believe, do understand the need for further change, but it's fair to say that there are also very strong national issues that have formed the backdrop to these discussions in the past that haven't gone away. So further progress in banking union is going to be very complex and is actually going to be very, very difficult. But my fellow finance ministers do know that the context for these negotiations has changed, and we have recommitted ourselves to seeing how or if further progress is possible. And that will be particularly important in the first half of next year.
Minister, we must leave it there. The Minister of Finance for Ireland, Pascal Donohoe, with us this morning. Martin Schenker next on Washington, and then Adam Posen on the American economy. Stay with us. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
This morning again, markets priced for disinflation. The U.S. two-year yield tests late summer lows. The real yield, it signals no reflation. Oil at $50 a barrel. In America, there will be 300,000 deaths by Christmas. In Germany, cases and deaths surge. And in Beijing, Chinese authorities have detained a Bloomberg News assistant for suspicion of engaging in criminal activities that jeopardize national security. Our editor-in-chief, John Micklethwaite, says, quote, "We will continue to work as hard as possible to help her and her family." Good morning, everyone. Bloomberg surveillance from New York and London, and distressed by the news from Beijing. But Francine Lacroix, so much other news out there. As we just heard from the finance minister of Ireland, it is an extraordinary Friday evening and afternoon in Europe.
It certainly is. So there are good news and bad news when it comes to the European story. Of course, the focus is on Brexit because once again, there's another deadline, although we're hearing that this deadline could once again be postponed. Remember, on December 31st, the UK supposedly leaves the EU. So it's the next couple of days that will be decisive. At the same time, and we heard that from Mr. Donohoe, there was the EU recovery plan that has been agreed in Europe, but that sets the Eurozone on a much better footing. And then we look, of course, at stimulus in the US. We look at the Supreme Court in the U.S. And, you know, we're not far off Joe Biden taking over. I think it's almost to the day a month from now. And so we'll try and figure out what 2021 has in store.
I note last night the president-elect and the vice president-elect named as the Time Person of the Year with its own politics there as well. We'll do it in the data check, but the German two-year yield negative 0.779 speaks volumes this morning. With our first read news in New York City, here's Karina Mitchell.
Tom, thank you. The U.S. is one step closer to getting a coronavirus vaccine. A panel of government advisors has approved the shot developed by Pfizer and Germany's BioNTech. The experts say the vaccine's benefits outweigh the risks. The FDA could give the final go-ahead within days. And a warning from British Prime Minister Boris Johnson. He's saying business and the public should prepare to leave the European Union single market without a trade deal. Johnson says the UK will continue to seek an agreement, but he warned that the EU's demand that the UK follow future changes in its rules is a major obstacle. And authorities in China have detained a Bloomberg News assistant on suspicion of endangering national security. Hayes Fan is a Chinese citizen who was seen being escorted from her apartment building Monday by plainclothes security officials. Officials say the case is under investigation and Fan's rights have been fully insured. We spoke with Bloomberg editor-in-chief John Micklethwaite.
We have spoken to a lot of people on an informal basis all the way across the world. You know, we've spoken to people in Washington, the Chinese embassy there, all the way across to China itself. We've obviously tried as hard as possible to find out exactly what we've got. We've got this statement from the authorities detailing why they are holding her in the way they are. And so we have reported that. We have been doing our best to try and find out exactly where she is, what's happened, to try and get her back. And, you know, to be very clear, Hayes is a very talented person, very respected, integral part of our newsroom, very popular, and we are deeply concerned for her well-being.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina, thank you so much. On the data front, futures deteriorate. Negative 20 is now negative 31. Dow futures negative 212. And the VIX finally moves somnolent VIX, as John Farrow says, through the week. And now that's changed. Two big figures on the VIX. 24.42 is an important statistic there, and yields come in. Disinflation and a struggling equity market. Francine?
Tom, I'm definitely looking at what's happening with oil, and this, moved the market yesterday. Investors winding up the week doing risk-off trades. Again, stimulus talks hung up, but actually developments on coronavirus, I guess, weighing on sentiment. Dollar rising. I'm also looking at, European stocks. They're down. Crude oil actually fluctuating after pushing above $47 a barrel in New York. And that was the highest since March. Tom.
Very good. For our international audience, a Washington brief this morning from our Chief Content Officer, Martin Schenker. Marty, good morning to you. You've done this for so many years, and you know the quality of Greg Stohr and our Supreme Court team. What do they tell you about what Mr. Roberts and company will do this Friday?
Well, it could come at any time, Tom, that the Supreme Court issues a ruling on the Texas case. As you know, the 4 states whose results are being challenged by the Texas suit filed filed with the Supreme Court yesterday their brief asking the court to summarily throw out the suit, and the Supreme Court will take a look at it, and they could issue a ruling at any time, even including over the weekend or in the evening. So I would suspect the Supreme Court to issue a decision at any moment.
The electoral process is a process getting to this Monday. Does Craig Gordon and our team have a confidence that by Monday there will be a certitude that Mr. Biden is the next president?
Well, I think we have a certitude that he is going to be the next president already before the Electoral College actually votes on Monday. But Donald Trump has vowed to keep fighting, and, you know, in January 6th is when Congress has to accept the Electoral College decision. And he's given every indication he's going to keep fighting until at least that date.
Marty, good morning. How's the Senate race in Georgia going?
Well, it's close, right? The polling in Georgia has been pretty good, and the polling says that it's a close race in both races. So Mike Pence was down there recently and trying to rally the forces because there's some concern that the fraud charges are going to depress GOP turnout, which could make the difference in those races.
Marty, when you look at the story earlier this week about Hunter Biden, how much does that change the narrative in Washington?
Well, we and others are reporting, this is just an unfortunate but necessary problem for Joe Biden to deal with in his first, as he takes office. It's very reminiscent of the concerns surrounding Donald Trump's children when he took office. So it's going to hang over his administration, and he's going to have to take a very distanced approach, and his naming of an attorney general is going to be critical in how that case is handled.
Marty, what is so interesting here is we're talking about 10 million plus Americans running out of some form of food and rent, I believe December 26. We've got all these other distractions as well. Is your study of this that people are actually focused on some form of income substitution or income support before December 26th?
Tom, it's fascinating to me that there's a possibility that this Congress could go home for Christmas without producing a rescue bill for the American economy for people who are running out of assistance. How they can face voters having failed to do that is sort of unfathomable to me. There's a lot of speculation that they'll reach some last-minute deal so they don't have to face the voters. But in this environment, one never knows. It's still possible they could basically let the American people down.
What is the strength of Senator McConnell right now? The power?
He's if there's one thing Mitch McConnell knows how to do, and that's how to keep his colleagues in line. So he is very much in charge of this whole stimulus negotiation. And unless some of his GOP colleagues break from him to get a deal done, it's going to be up to Mitch McConnell what happens.
Martin Schenker, thank you so much. Our Chief Content Officer with us today on the events of Washington, and they are really quite extraordinary. What you need to know is futures have deteriorated. I'm going to call it a controlled level of -15, -20. Suddenly, -36, and Dow futures -256 as well. The VIX now explodes out 24.73. We're going to do more market checks here through the morning. General Kimmett in the noon hour. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg Surveillance, good morning. It is just an extraordinary Friday. My head is spinning over the news coming in from all of our bureaus. Francine Lacroix in London, really focused on what's going on in Brussels. I'm Tom Keenan here. I don't know what I'm focused on. I'm just trying to get through Friday. Adam Posen with us right now with the Peterson Institute. Again, this with futures at -34. Adam Posen, your Stephen Weissman did a wonderful book, I don't know when it was, on moral conflict. In the fiscal debate in America, whether Republican or Democrat, conservative or liberal, I think of the late, great Ed Lazier of Stanford as maybe on the conservative side, and I'll let you pick your token liberal economist. There seems to be almost a morality play about our debt and deficit. Discuss the moral conflict of too much debt.
The only moral aspect of too much debt, Tom, is if you are biasing today's people against tomorrow's children, grandchildren in the future. And that is the moral aspect of debt, because government debt eventually gets paid. Otherwise, it's about efficiency and things that don't carry terribly much moral weight. And when we're talking about the intergenerational equity, it comes down to essentially costs and benefits, which means what are you spending the money on? Are you spending the money on things that are just consumption today for the baby boomers? Or are you spending the money on things that get the economy in a better shape in the future? And that's what the debate should be about. Fixating on debt as an immoral thing is something that is throughout Anglo-American history has been a concept, but is not really something that holds up to scrutiny.
But yet we're living it. We're living it right now. Whatever anybody's politics and varying politics on the show, we are living this moral drama, this moral play.
No, I got to give credit to people like your Bloomberg columnist, Michael Strain, Glenn Hubbard, Ken Rogoff, Carmen Reinhart, people who were associated with conservative views, who had been very much warning and concerned about debt in the past, and who've made the principled choice to say, no, the circumstances are different now. Debt isn't the same thing when interest rates are this low, when there's a pandemic, when there are other things you can do with the money. And so I don't think you can just say, oh, it doesn't matter who take who from which side. I think the responsible conservatives, frankly, have moved because reality has moved. And so the people penning the views that debt is a terrible thing right now are people who either have a dubious but plausible concern about financial instability, or they're being hypocritical.
But Adam, is there a level of debt that is more acceptable than others, right? I mean, I know the harsh reality is also, it depends on what you do with the debt, where you invest it. Where are we right now? Is it being invested where it should, or do we need to change course?
I think that's the right question, Francine, is do we need to change course on how it's being spent? My colleagues, Jason Furman and Larry Summers, recently came out with their view that what matters is what share of your debt is going to interest payments, because that's truly about helping people now versus the future. And especially since if you're using the money wisely, you're paying down the debt because the growth prospects come up. So I think that's a good first way to think about it. There are risks to interest rates that go